I'm Judy Shaw for What's the Fund. Joining me today is Bill Sokol. He is Director of Product Management at VanEck. Bill, it's great to see you. Thanks for joining me on What's the Fund.
Thanks for having me.
Now, quick note to our viewers, this interview is for informational purposes only. The NYSE doesn't recommend any investments or investment strategies. All right, so Bill, tell me, what's the fund you're talking about?
So today we're talking about the VanEck CLO ETF, ticker CLOI, or CLOE as we refer to it. And CLO refers to collateralized loan obligations.
Okay, great. So tell me about this fund and tell me about the strategy.
Sure. So CLOE is an actively managed ETF, and it invests primarily in investment-grade CLOs. A CLO is a securitized pool of leveraged loans. They're issued in a way where you have multiple tranches of debt with varying levels of risk and return. CLOE focuses on the more senior tranches, the investment-grade tranches, and this provides several benefits. So first is a substantial yield pickup versus corporate bonds and loans with similar ratings. And right now, that yield pickup, as measured by yield to worst, is very attractive on a historical basis. Second, CLOs are really well insulated from defaults in the underlying loan portfolios. Historically, you've seen historical default rates of CLOs that are well below corporate bonds and loans. And in fact, there's never been a default in the AAA or AA rated CLO space in the market history. This is thanks to the subordination and risk protections that CLOs provide. Third, CLOs are a great diversifier, and this is true at a few different levels. So every CLO that CLOE invests in has 200 or 300 or even more individual loans underlying it. And this means you have significant diversification in terms of single issuer default risk and sector exposure. But CLOs are also a great diversifier within a core fixed income portfolio because they have very low correlation to core fixed income. This is due largely to the floating rate coupons that CLOs have, and this reflects the floating rate nature of the underlying loans. That means that CLOs are not sensitive to rising interest rates, and this, of course, made them very compelling in the last year or so. We think that CLOs are really attractive right now in the current market environment. Investors still need income in their portfolio, but right now don't want to take a lot of excessive risk in order to achieve that yield, given the uncertain market environment we're in, given either rising rates or concerns about slowing growth. So we think that CLOs can help balance the need for income while also mitigating these risks. And lastly, I would just say we partnered with PineBridge Investments to manage CLOE. This is really an asset class where you need to take an active approach, and PineBridge brings decades of CLO market experience. So CLOE, we believe, is a great way to access the benefits of an asset class that really have not been available to non-institutional investors until now, and also a way to access the capabilities of PineBridge.
All right. So Bill, tell me, where can our viewers go to learn more about this fund?
Yeah, so you can go to vaneck.com. We have a lot of information on CLOE, a lot of educational material on CLOs if investors want to learn more about the asset class. And on our website, you can subscribe to get the latest research on CLOs and also other floating rate solutions that VanEck offers.
Bill, wonderful to talk with you. Thanks for joining me on What's the Fund?
Thank you.